it or not, markets existed before the China trade deal saga. That's right. So while these negotiations are a factor, there have been many other components driving the markets all along, even today. And as far as going forward, we're looking at first quarter earnings have been dramatically lowered than initially anticipated. Also, we're getting close to testing all-time highs. There's always a sense of anxiety that comes with that. But there are tailwinds, right? That jump in CapEx for the fourth quarter in GDP was amazing. And greater share buyback programs, you cannot overlook that. But what's the next real catalyst for this market? Here to weigh in, TrendMacro CIO and founder Donald Luskin and Raymond James chief investment strategist Jeff Saut. Jeff, let me start with you. Okay, so we're finally pulling back after really a mind-boggling, remarkable start to this year. But the question now, as you start to see this market pull back a little bit, is what could be the catalyst going forward?
I still think it's going to be earnings, Charles. I think the lowered earnings expectations way too much. I think the economy reaccelerates in the back half of the year, and I think earnings continue to come in better than most people expect. And I think there's way too much cash on the sidelines, and people are underinvested.
You know, Donald, I agree with that. This recent report, the Bank of America Merrill Lynch survey of all these money managers, they manage like $750 billion, 44% in cash. I thought that was mind-boggling. I thought these folks were paid to make money, not to watch big rallies like this. So is that, in your mind, could those things be the catalyst?
Sure they could. I mean, this is what all, no pun intended on your name, sir, but you've heard this expression, the pain trade, right? Right now, the upside is the pain trade. There are way too many people who got way too pessimistic, who, I mean, even you kind of fall into it sometimes a little bit, Charles. Like in your introduction, you were talking about, or actually, I think maybe it's your guest, Jeff, who said this, that we're talking about the economy reaccelerating. Why are we even talking about that? The economy didn't decelerate, right? Everybody's just got this illusion that all of a sudden in the fourth quarter everything started going to hell. It didn't, in fact. Everything's actually looking fantastic, which is why U.S. stocks are within 2 or 3% of all-time highs. So everybody just get with the program. This isn't that difficult.
Jeff, your thoughts?
Yeah, I don't disagree with that. Investing's not all that complicated. They try to make it complicated in business school. That said, I did not see this decline coming. I went into a meeting at 10 o'clock, went into another meeting at 11 o'clock. The markets looked okay at 10 o'clock. I came out of that meeting at 12:30, and the Dow was down over 400 points. I made some calls to my Washington friends and a few trade desks, and it's a trifecta. I mean, it's the lowered earnings expectations.
Jeff, wait, I have to interrupt you. This isn't a decline. We made new highs for the year, and now we've had a kind of a bad-ish half day. Get a grip. Nothing's going wrong here. This is fine, right?
Yeah, well, 400 points in a day is for people that are traders, which I am not, is not particularly good market action.
Well, certainly you look into it, right? I mean, we all been around the block a few times, and we all try to be cool and have ice water in our veins. But Jeff, to your point, I guess you also get spoiled, right? Because this is a market that's going either straight up or straight down. There's not a lot of sideways with this market. And I will say, Jeff, I'm surprised you were surprised, because last week we had a couple of sessions where we would be up 200 points and it would evaporate like almost in an instant. So you can sense this was coming, and the breath started to change also. But again, having said that, what are you concerned about? Because all three of us are relatively bullish. What should the audience be somewhat concerned about, Jeff?
I don't think the trade talks are going to be all that big a deal. I think there is going to be a trade deal. The rumors in D.C. was that President Trump's going to give away the kitchen sink because he needs a deal with North Korea by 2020. I don't think the earnings are going to decline nearly as much as people are worried about. And I think some of this I was told by my D.C. friends, I used to live there, that the Mueller report is coming out, and it's not going to look particularly good.
Really? Wow, I thought that, the way the Democrats are setting this up, it feels like that Mueller's drilled a dry hole, and now you got Nadler and everyone else coming at this. I do want to, Don, a moment ago, you put out a tweet. You said, I so wish I had been in that last panel about Ben Bernanke, the Federal Reserve, the road to millennial socialism. Great discussion. Okay, give us your thoughts on that.
I just want to say that I'm not going to blame Ben Bernanke. He inherited a 100-year-old institution that was created a century ago just to step in every once in a while in case there was a banking panic. You know, and in history, there's a banking panic every 20 years.
Why is it so important that we save
Chuck,
banks, that we create $4 trillion to save the banks? When someone with a nickel and dime store...
Hey, man. That's the least of our problems. What's really wrong with the Fed is that the Congress has given them this mandate for full employment, as though a committee of 7 presidential appointees can somehow have some kind of magic wand and can live up to a mandate to just wave that wand and have full employment. Okay, that is a socialist agenda. That is ridiculous. That is the root of the evil. And once Congress gives the Fed that mandate, now you're saving banks and printing money and doing everything else.
Jeff?
I think things are going along just fine. I think we're in the secular bull market. I think it's got years left to run, Charles.
Yeah, I'm with you. I agree, and I think that magic wand is a magic printing press, and you can sway a lot of things when you can print up $4 trillion out of thin air. Gentlemen, thank you very much. Really enjoyed this conversation.
Thank you,
Donald
Charles.
and Jeff.